Guys, welcome back to the channel. You know, one of the most interesting things for me today was the total change in tone that we saw in the media, that we saw across YouTube. Guys, I hope it wasn't lost on you, but just 24 hours ago, we saw so many YouTubers and so many pundits on the media talking about a top, talking about a technical bear market. I hope you appreciate that on this channel, we stood tall. Our convictions stood tall. We didn't fall to the trap of a bear market. We knew that the fundamentals were strong in this sector, that the demand didn't change overnight. We didn't get scared off when Michael Burry put a short position on this sector because his thinking hasn't changed. We have stood tall, and I hope you guys appreciate this conviction because it's not blind bullish behavior. I think if you've watched this channel long enough, you know that I am completely transparent. When I feel like this sector is getting close to that point, I will be honest with each and every one of you. I told you to stay away from SpaceX. I didn't think it was a great IPO. Look where it's trading now. You could get it at a significant discount. I'd share with you, I thought Cerebras was overpriced. That stock needed to come down below 200 before I even stepped close to it. And it's in that marketplace now, right around that. And we may be up over it today. But guys, we have had conviction on this channel. We haven't wavered one bit. And like I said, it's not because of being a blind bull. It's because the fundamentals are strong. The demand is strong in this marketplace. If you just look at the last few thumbnails and videos I delivered, we've gone from panic, the flush, the pivot, and today it is all around the vindication because we have stood tall. I saw the comments from each and every one of you, the belief that we have in this sector, that we have in these companies because of what they're delivering in the marketplace, because of the bottleneck or the constraint that they're delivering in the marketplace. If you've watched this channel long enough, you know that the smartest institutional money, they don't trade on headline fear. They trade on physical infrastructure constraints in the market, and that's what we focus on as well. Today, the entire semiconductor tape, it snapped back aggressively. The broader memory complex, it staged a textbook fundamental and technical reversal. What the retail crowd mistook for a structural trend reversal was nothing more than a localized sell-the-news profit-taking correction. The fundamental foundation underneath the full AI stack, whether that's compute, memory, networking, physical data center power, it's not just intact. It's accelerating at an unprecedented pace. So today, guys, in this video, we're going to look at three massive structural macro signals that prove that the AI infrastructure expansion is completely breaking away from historical semiconductor cycles. We have a staggering infrastructure development, a memo that was leaked from Meta, a massive $250 billion domestic supply chain commitment from Micron that I want to cover today as well, and a historic $28 billion US Nasdaq listing that is hitting tomorrow with the world's high bandwidth memory leader, SK Hynix. It prices tonight. It'll hit the market tomorrow. We've already seen some impact, in my opinion. We'll look at that across the tape today. We'll look at the performance of the memory titans as well. How do they perform in today's market? So let's unpack the real numbers. Let's dive into the video. Let's talk about all those topics, and let's see what the market is finally waking up to. But if you guys haven't done it already, make sure you hit like. Make sure you subscribe to the channel. Let's keep pushing this community. Let's grow together. Let's learn together, and let's continue to make some profits together. Let's get started. Let's start off by taking a look at how the sector actually performed today. If I pull up the Nasdaq 100, you can see a lot of green across the board, and green particularly in the names that we like in the AI hardware world. Look down in the bottom. You see Broadcom, another solid day. Micron up, AMD up. We saw the memory, the computer hardware companies here, the other members of the memory titans, the Fab Four, are all up. We saw strong days with Lam, Applied Materials. We also saw, Marvell up almost 5%, Astera Labs up over 6%. It was a solid day for the AI infrastructure stack. But let's take a look at the Fab Four. Let's walk through them all together just to see how they performed. You can see on your screen, Micron had a strong day. It was much stronger at one point. If you look over to the day's range, the intraday high got up to 1,035 a share. I'm going to go through that in a moment in the candle chart and show you what happened in the afternoon session, what my thoughts are that actually drove that performance down. But we closed today at $9.90 a share, just over $9.90 a share, up about $42, almost 4.5%. We're seeing in the after hours, it's actually been fluctuating. I've seen it go up over 1,000. Back right now, it's back about $7 down. We're going to keep an eye on it, but overall, this doesn't concern me at all. I think we are starting to see strong confidence and conviction back in the sector. We have a big catalyst moment tomorrow as well. Let's see what kind of confidence we see from the institutional players with that listing tomorrow for SK Hynix. But overall, let's celebrate the day we saw today. We're moving back in the right direction. SanDisk led the way. It was up $131 today. Finished at $18.58 a share, about just over 7.5%. But guys, it was much higher than that at one point as well. We also saw some afternoon slide. You could see over here on the right, I'm circling it. It got up over $19.50 a share today. I think we're moving back on the right track here, particularly with a big announcement that I'm going to cover in a moment between Meta and SanDisk. But we see the same phenomenon in the after hours happening right now with SanDisk, where it's down by $16, a little bit under 1%. If we look at the storage titans, we see that Western Digital was up over 5% today. It was closed at $578.05, down about $1 in the after hours, but it did breach 600 again for an intraday high. You can see right here, 601.50 was where we got for today's high. Still far away from that 52-week high, but we're moving in the right direction with this Storage King. And then the last member of the Fab Four, Seagate. So Seagate was up by about 3.5% today, just under $30 a share, closed just under $8.90 a share, but it also got up over 900, got to about 937 today, seeing a little pullback, 0.5% back, about just under $5 a share, trading right now about $8.85. So we'll keep our eye on these memory titans overnight. We'll see if the sentiment changes. We know we see it all the time in the sector when we see kind of a shift from one way to the other. But today, it was a strong day for the sector. It's what we thought, though. As I told you in last night's video, I just feel we're starting to feel a little bit of a pivot, a little bit of confidence coming back in. We got through all of that short-term kind of bearish news. I never thought we were at a top. Didn't believe we were in a bear technical market. I just felt like we saw some liquidity come out of the sector, rotate out. We had a number of different headlines. We had a bit of shaky anxiety for some investors that sold their stocks overall. I hope you didn't give it to the institutions at a lower discounted price point. But the conviction for most of us in community, I know, has been very strong. But I want to jump over and just show you the candle pattern chart before we leave the performance for the sector, because I think it tells you something very unique. If you look at the candle chart, you can see down here, and let me pull it up a little bit. This is where we finished on Wednesday, and we knew coming in we were going to have a gap up. We did gap up, but we saw a little bit of sell-off, and that's why we have this red candle with a long wick. We kind of sold off, but then we saw some support come back in, and then we fluctuated really between this $1,000 level. If you just look across the top as I scroll across these 5-minute candles, you can see it closes right about 1,015 consistently, all in that range. We dipped down here a little bit, got back to a high right here of 1,024, about 1,025. This was kind of later in the afternoon session where we started to see this kind of pivot, this drop off overall, all the way where we flushed down here into about 5 minutes before the close overall. It got to about 887. We did see a little strong market on close position here. You can see the volume underneath got up to about 111,000, just over that 111,000 shares in the last 5 minutes. But guys, when I look at this kind of slide here in the afternoon, it's what I anticipated when I shared in the comments last night. I said, I think we'll see some choppiness in the afternoon, because I just think we're going to see capital rotate out of these stocks and get ready for the SK Hynix listing tomorrow, because global tech portfolio managers who were awarded cornerstone allocations, they must fund those massive settlements by tomorrow morning. Because SK Hynix is the global leader in high bandwidth memory, the most efficient funding source for the mega cap desk looking to build an overnight allocation is to trim their existing high liquid domesticated memory exposure. And that's exactly what we saw. That's what I think we're seeing right here in the afternoon session, because we know how much liquidity Micron has been built into it based on the parabolic run that it's had over the last year or so. So I think we're starting to see what we did see in the afternoon with some partial profits that were taken out of Micron or some selling out of it to sit that capital on the side and get ready to build a position in SK Hynix tomorrow morning. But guys, this isn't a breakdown in AI fundamentals. It's not a breakdown in Micron fundamentals at all. It's a mechanical institutional cash shifting, the biggest debut of the year that we're going to see tomorrow morning. So that's exactly what I think we saw with Micron. I think that's why we saw that slide where we're at about 1,025 a share and then ultimately ended about 990 a share for the day. But still a strong performance for me. I think it was great to see the sector go up again. Great to see positive performance across all members of the Fab Four. But I want to get into some major stories that we saw today that are big signals for this sector moving. So let's start with the absolute biggest catalyst for today, the massive story that I think sparked today's rally a bit. It was the internal memo from Meta that was leaked to Reuters that completely blindsided the Wall Street bearish tech models. Let's pull up that article. We'll walk through it together. You can see it on investing.com right here. As the title says, SanDisk surge as Meta memo confirms the multi-year flash storage deal. So let's walk through some of the details of the deal overall. In the middle paragraph, you can see right here, the memo lays out an ambitious infrastructure blueprint. Meta plans to deploy 7 gigawatts of computing capacity in 2026 and then double the figure to 14 gigawatts by 2027. Central to that build out is Iris, Meta's next generation in-house AI chip, which is scheduled to enter into production in September of this year. So this relentless infrastructure commitment that we see from Meta, it's translating into an estimated capital expenditure of up to $145 billion from Meta this year alone. The line item that directly impacts our core holdings. As it says there, that Meta isn't buying an off-the-shelf accelerator. It's their custom in-house AI silicon that they're calling Iris. It is scheduled to head into mass production this September, and they have signed a massive multi-year supply chain agreement to secure the underlying physical layer. The primary beneficiaries are right here earlier in the article. It says the memo revealed that Meta has locked in long-term multi-year supply agreements covering flash storage with SanDisk, memory chips with Samsung, and then fiber optic equipment with Sumitomo Electric as part of the sweeping expansion of AI computing infrastructure. And this brings us directly to SanDisk, because in addition to this story, they also injected a massive dose of predictability into the market today by officially pinning down its calendar day for their next earnings. The company announced that it will report its fiscal Q4 and full year 2026 earnings on August 5th. So mark that day down in your calendars, because then it'll be followed immediately by a highly anticipated investor day for SanDisk on August 13th. Those are going to be two massive days for this company if you're a shareholder all. Institutional traders, they love nothing more than concrete timelines, and what we saw from SanDisk today. So the ultimate takeaway, I think, for me from this article, for the sector and for SanDisk, is that this isn't just a localized demand spike. It is a structural shift in financial visibility of the entire flash storage sector. Historically, SanDisk's business, as you know, has been highly cyclical, completely chained to the boom-bust cycles of retail smartphones and consumer PCs. But when a hyperscaler like Meta locks you into a multi-year agreement to backstop 14 gigawatt data center, and then management lays out a clear visibility roadmap for August, your forward revenue visibility becomes ironclad to the market. It becomes ironclad to institutional investors, and they love that. So the so what is very clear for me for this article. SanDisk updates the street on August 5th and then hosts this investor day on August 13th. Look for management on those two key dates to issue multi-year structural higher forward guidance on both their 3D NAND and their enterprise SSD pricing. We are tracking a path here, guys, with SanDisk where their non-GAAP gross margins could sustainably lock in above 75%, effectively transforming this firm from a volatile hardware vendor into a high-margin, high predictability utility provider for the cloud. While Meta was scaling the demand side, Micron completely altered the domestic supply chain narrative this morning by announcing a monumental acceleration of the U.S. infrastructure playbook. Let me show you that article. You can see on the headline, Micron boosts U.S. investment plan again, commits $250 billion through 2035. We walk through some of the details. We know that Micron already committed $200 billion to the U.S. build out, to onshoring here in the U.S. Well, today it plans to increase that investment by another $50 billion, and it said that it is committing now $250 billion in the U.S. through 2035. Driven by a surging demand in memory chips in the AI era and President Donald Trump's push to bolster domestic chip production. The new investment plan represents a jump from the $200 billion that Micron announced last June, which was already increased by $30 billion from its original spending plans. But there's more to the story here, which I think was also a reason why we saw Micron jump the way we did today. Because it wasn't just the fact that they're making this massive investment in the U.S. It's also how they're managing raw supply risk. To secure long-term raw material supply, Micron is deploying, as you can see, $3 billion to fortify domestic suppliers. This includes a $500 million strategic financing to Global Wafers, a company that's out of Sherman, Texas, and that's backed by a massive 10-year supply agreement for the 300 millimeter raw silicon wafers. It was so critically important for Micron to sign this partnership to make sure they can lock up their supply. That's exactly what they did with Global Wafers over here. I think this was a massive move, a very strategically smart move for the leadership company. And obviously the market thought it was as well, the way they responded. The bottom line, guys, with these announcements from Micron, it completely alters how Wall Street's models the company's structural free cash flow. By tying down a decade-long advanced wafer supply agreement like they did today with Global Wafers, and they also announced that they're pulling their construction ahead of schedule in Clay, New York, that fab that they're building out there. So Micron, in my opinion, is building a massive supply moat that their competitors will not be able to easily match. The so what for the sector is that the memory is no longer a spot market game. As you know, it has been evolved into a strict allocation-driven capital layer. With $100 billion that they have in binding, non-cancelable take or pay customer agreements, it's already backstopping their balance sheets. Micron's revenue floor, it has been permanently elevated. It's what we've talked about over the last few videos. This is why their forward guidance, guys, is confidently scaling straight towards a jaw-dropping $50 billion. It proves that despite short-term macro noise, Micron's earnings power is on track to print more free cash flow in the next 18 months than in all prior hardware cycles combined. Think about the pricing power of that statement and the demand that this company is meeting in the marketplace overall. So those were big stories that I wanted to cover today, both that affected SanDisk and Micron. This brings me to a question that I've gotten consistently on this channel. Is just how do we play this sector moving forward now with SK Hynix in? How will it affect Micron overall? How will it affect the entire sector? So I saw this article I wanted to cover with you. It was on Bar Chart today. You can see the headline. It says SK Hynix stock debuts for U.S. investors tomorrow. The DRAM ETF could be the biggest loser. I tend to agree with this as I go through some of the sentiment that they mentioned, because we got to remember that in the past, this Round Hills ETF DRAM has been the only way we could play SK Hynix in the U.S. market. But if we actually scroll down and look at the underlying reality of the fund today, the biggest challenge that I think we're going to see is if you look right here under the net expense ratio of 0.65%. So the DRAM ETF charges a hefty 0.65% expense ratio, and more than 75% of its entire weight is concentrated in just those three stocks that I mentioned of SK Hynix, Samsung, and Micron. So now that SK Hynix is officially printing tomorrow under the ticker of SKHY, directly on the Nasdaq, the structural necessity for paying an asset manager a $65 basis point fee completely evaporate. DRAM is aggressively utilized by U.S. institutional fund managers as a necessity proxy to gain indirect exposure to SK Hynix. A significant portion of ETF's multi-billion-dollar asset base now faces the risk of capital rotation. Now that investors can directly purchase the liquid standalone, SKHY on the Nasdaq without paying that 0.65 expense ratio, the fund is highly susceptible to structural outflows and near-term selling pressure. Conversely, though, when we look at Micron, Micron remains largely insulated from this specific class migration because it is the sole U.S. domestic national champion for secure AI hardware infrastructure. Micron retains its unique politically protected value proposition and steady long-term institutional backing. So that's why I just feel Micron is at less of a risk for friction with SK Hynix. I do think long-term, though, it is a bullish sign for the sector. We're going to see more capital rotate into the memory sector with SK Hynix than we've had before. You're going to see capital rotate, and it's going to validate the entire sector. It's going to lift all boats across the sector, including Micron. So I'm going to repeat what I've said the last few days in my closing. Guys, don't let short-term sell the news, algorithmic pullback shake you out of structural, long-term secular trends. Think about what we've seen the last 2 weeks. Samsung prints record profits. Micron announces $250 billion expansion or investment here in the U.S. Meta doubles their infrastructure spending. SK Hynix is launching one of the largest semiconductor listings in years. None of those are bearish developments. The market simply had to digest extraordinary expectations. The AI infrastructure supercycle is completely intact, and the fundamentals remain ironclad. So guys, keep your eyes on the SKHY, the SK Hynix listing tomorrow morning at the opening bell. Keep your portfolios concentrated in high conviction, pure plays that are solving the constraints that we see in the marketplace, and let the retail crowd panic while you follow the institutional order flow. Make sure you hit that subscribe button, drop a comment below, and I'll see you on the next breakdown after the closing bell tomorrow.